Welcome back to HBRV Lifestyle, Livingston RV Services Incorporated, where when I'm talking about older units, I'm talking about those units, those trailers, those motor homes that are older than 7 years. Okay, now I do have a credit union that we use here in California called Logix Federal Credit Union, and they'll do up to 9 years. They also only do 10-year terms, obviously, but we have a couple of units on our lot that are older, 2001 all the way to a 2009. And I had a young man, good coach. It's an attitude you guys have probably seen on this channel already. And he's got good credit. Doesn't have a lot of money down though. So let's go over two things. If you got a piece of paper and a pen, you want to make sure you write this down. Number one, when you want to do normal financing with a credit union or your own bank, they are going to want at least 40 to 50% down on a used unit that's older than 9 years. Okay, I'm going to repeat that again. Normal financing, and this crazy market, really it's the older stuff that looks like it's going to be the only thing to finance. Well, let's start with number two. Number two is the terms are not 10 to 20 years. They are 2 to 5 years. They're going to be more like a car. Now, let's say that you're like this young man who had a 785 score on Experian. He's got so many paid autos. He has outstanding credit. He can pretty much buy any trailer or fifth wheel around 50 grand that he wants to. The hard money, folks, okay? This is the norm when you're trying to finance a 2090, let's call it 98, 99, 2000, 2001. You see a lot of these out there that are 20, 25, 30 grand. I have a diesel pusher on our lot, and they're willing to do it. You know, as long as you got a paycheck stub. They are also, the two banks that I use for this, also will take bank statements for those that are business owners that show the government very little money on their tax return. They're called Landmark Financial. They do up to 5 years, and they'll take banks to get away with $1,000 or $2,000 down on a $10,000 to $12,000 unit. You're not doing traditional financing. You're going to be doing hard money, subprime lending. Okay, so you know. Again, the reason I'm telling you this is because there's a lot of times where you'll go to a lot and somebody will tell you they can get you financed, and the finance manager laughs the salesperson out the door. Don't kid yourself. It's because the guy doesn't know. There's not a training manual for any of this. I had to learn the majority of this through trial and error, okay, over the years. Now, there are a couple of guys that are way better than I am at this. Probably a handful, 4 or 5 guys in California that are better at getting bank loans than I am. And a lot of times we talk to each other. You'd be surprised that a lot of us will call each other when we got something where, hey, where would you send this? Hey, where would you send that? So there isn't a book on this. And that's the reason why I'm doing these videos, is to help you in this crazy market buy a trailer and know what you're getting yourself into, okay? So cheaper isn't always better. I had a guy walk in yesterday on a $9,000 toy hauler I have in the lot, and he thought he could do a 10-year term and his payment would be $75 a month. It doesn't work like that. The cheaper the trailer, the harder it is to get financed, okay? And what I mean by that is, let's say you're after a toy hauler and it's a 2004 and you see it for $16,000 private party. You need all cash. You're going to get a $5,000 or $6,000 traditional loan on your own for that toy hauler, okay? So cheaper isn't always better, okay? The other thing you have to realize too is that a lot of times the reason why a lot of these companies don't want to finance this stuff is because normally they all book for the same amount of money. So when I go book out a trailer that's from 2001 to 2007, they all have the same book. They all have the same wholesale book, right around 4 or 5 grand. They all book the same, no matter if it's an Airstream or a Springdale. They all book the same. So the NADA guide isn't helpful, so they do hard money loans. Okay. Now, there's nothing wrong with this. If you don't want to finance that much, you can also do what I suggest to a lot of people, and that's go get a personal loan. Okay. Go to your own bank, get a personal loan. There's a lot of times they'll offer 36 months at 1.9 or 2.9% interest. My credit union, Unify, twice a year does 249 on a 36-month personal loan. They'll do up to 15 grand. So just make sure you do your homework first before you go into the dealership. Get a loan set up. If you're looking for a cheap trailer, I'm talking about under $25,000 toy hauler, travel trailer. Set up your own financing first, especially if you're working with $500 to $2,000 down. Go get it pre-approved with a credit union for a personal loan before you walk into the dealership. Okay. If you want to use our financing, I have the options. Now, because either way, guys, with a lot of this, folks, and I know I'm rambling a little bit, but you have to understand that there's no points made on this. The dealership can't mark up the rate. Just like that subprime loan I talked about earlier in the week where we can't mark up the rate. We can't mark up the rate because a lot of times, like a bank like Lendmark sends us a cashier's check. Golden Acceptance sends us an ACH. We don't get any money. They make all the money. They make all the points. They make all the finance. It's a cash deal to us, pure and simple. Whether it's giving us a check personally, bringing $100 bills like we had one guy come in today and do, or whether it's a cashier's check on a personal loan from your bank, or whether we get the loan for you. Yeah, it's cash. The only time we get to make any money on the financing is when it's a newer coach and we make, 2% sometimes. Sometimes, a $50,000 loan, the dealership will make $500 to $1,200 from the bank as a thank you for giving us the loan, So it just depends. So one of the things that I want to make sure that everyone understands, if your credit score is really good or really bad, everybody pays the same rate when it comes to these older units, okay? Now, where's it good and bad? Well, let's go with the upside. The upside says, the upside of the whole thing is that that there's going to be no markup in the interest rate. Number two is that you're going to finance the maximum amount you can on that trailer with putting a little money down. Okay. Number three, at the end of the day, like this $15,000 loan, if the kid pays it off in a year and a half, 2 years, he'll pay $3,700 in interest. Okay. While if he went and bought a newer coach that he made the same payments on with a better interest rate, he'd pay triple the value of the unit. So there's an upside to it. So the interest rate isn't always a bad thing. For those that are establishing credit, you have very little credit. You only qualify for X amount of dollars. It builds your credit. Stop looking at the interest rate. Just worry about making that payment on time and build your credit to where you can get a newer coach. And then for those that just don't want to spend $40,000, $50,000, $60,000 on an RV, you want to spend 10 to 15 grand, smile, enjoy the coach, and know you can flip and get out of it. And it's going to cost you $4,000 or $5,000 in interest rather than $11,000 to $15,000 in interest. So the interest rate at the end of the day should not be your determining factor whether you buy an older coach. I'm just giving you the information because at the end of the day, it helps us. So thank you again. Please make sure you like and subscribe the video. If you have any questions, put them in the comments section. And happy camping, guys.